Welcome to the special live stream with the release of the Consumer Price Index or CPI data for the month of March 2023. It is set to be released at 5:30 a.m. or 8:30 a.m. Eastern Standard Time. Special live stream with the Sorry about that. Freaking echo. But 5:30 a.m. is pretty early for me. But we're getting a pretty big update for the month of March in about 10 minutes. And the inflation report for the month of February met all the expectations at 6% year over year and 0.5% month over month. And the core CPI rose 5.5% year over year and 0.5% month over month. So I want to show you from February here. Let me know how the audio is if you're just joining me. I really appreciate you guys being here. This is the summary for February, and one thing I'm really paying attention to is the shelter in the consumer price index summary, because shelter prices represent the largest share of the CPI, and it's considered the largest expense every consumer has to deal with on a monthly basis. Your mortgage, your rent, all that thing, all those things, right? So the index for shelter in the month of February was still the largest contributor to the monthly all items increase. Okay, so if you take a look at the, let me scroll down here at the third from the bottom here, where it says shelter. It is consistently increasing 0.7 to 0.8% month over month, with 8.1% year over year ending in February 2023. And the shelter index increase contributes over 60% of the total CPI increase. And the other significant increase we saw was the index for motor vehicle insurance. That was crazy at 14.5%. Apparel clothing at 0.8% month over month, and new vehicles, at 5.8% year over year. And the used cars and vehicles, cars and trucks, they are down 13.6% year over year. And we've been seeing significant decreases since October 2022. And on my channel, I always tell my audience that getting a car loan for a brand new vehicle is just such a bad idea, right? Because of not just the data we're looking at, but getting a car loan is just, such a depreciating asset. So in 2020 and 2021, we had a big shortage of new vehicles. So the used cars and trucks were almost the same prices as the new vehicles, right? So now that the supply chain has improved over the months, we're seeing an increase in new cars and decrease in, well, not necessarily a decrease in used vehicles, but the prices are. So if you're looking to buy a car right now, you're going to get a better deal, somewhat a better deal, with used vehicles over the new ones. What you don't want to do is get trapped in the continuous cycle of car payments by trading in your vehicle every 3 to 5 years. And if you truly want to build your wealth, there are ways to actually invest your car payments into an index fund or other investments and buy a vehicle every 10 or 15 years instead with the investment you have in a taxable investment account. So anyway, when the March CPI report comes out in about 7 minutes, or probably 6 minutes, I want to especially pay attention to shelter, transportation services, vehicles, and energy. The index for medical care services has been decreasing since October 2022. And we also saw a significant decrease in fuel oil at negative 7.9% and utility gas service at negative 8%. With Saudi Arabia and other major oil producers, they just announced that they're cutting their oil production by 1.15 million barrels per day from May until the end of 2023. There is a possibility that our energy commodities could spike between May and September. And we're already seeing that increase right now. But May to September, that's when people travel the most, right? So we could see a pretty big spike there. And I also wouldn't be surprised if the index for shelters starts to stabilize if the mortgage rates remain above 6.5 or 7% in the coming months. The home prices and rents in some areas haven't dropped as much as we predicted because of inventory. It's a simple supply and demand issue in some areas. This CPI data will be very important for us consumers and the Federal Reserve to see if inflation is starting to cool down. And Jerome Powell has repeatedly said that his target inflation rate is 2%, but Wall Street is predicting a rate pause in the summer or fall of 2023. And we could also see a surprise today that CPI or core CPI doesn't meet expectations. And what happens to the stock market if CPI comes in higher than expected with something like 5.3% or 5.5%? And I can tell you one thing, that the Fed or Jerome Powell does not care for the stock market. They're willing to create a recession and higher unemployment rate if they have to in order to bring inflation back down to the 2% target rate. And before I get into the summary of economic projections, let me pull the Cleveland Fed projections here. Keep track of time. Okay, so I really like the Cleveland Fed. Let me go ahead and zoom in here so you guys can see. They've been pretty spot on for the last couple months with their projections, and their CPI projection year over year is forecast to 5.22% in March versus 6% in February, and core CPI to rise 5.66%. And it's projecting the CPI to rise, 0.3% month over month, and a 0.45% increase for core CPI. Now that the March CPI is coming out, we're going to see the final CPI data for Q1 2023, which is projected at 4.16%. Interesting. So 4.16% CPI and 5.04% core CPI. Let me know if you guys can see this okay, or how my audio is doing. And what's interesting here is that CPI is projected to go up in Q2 2023, which makes kind of sense, right? Because Americans spend more money in the summertime, right? And one thing that's really hard to bet against is the American consumers. We should never underestimate the consumers because, man, we love to spend money, right? And most economists are concerned about the core services prices accelerating again because that would signal the Fed to possibly raise interest rates by another 25 basis points when they meet again on May 2nd and 3rd. And I'm going to be live streaming on May 3rd to watch Jerome Powell's press conference. And just quickly, I know we got like a minute left. Let's take a look at the summary of economic projection real quick. So if you take a look at it here, the FOMC releases the SEP every quarter. So we're not going to see another one until June. But there wasn't much change in real GDP for 2023, which was from, let me enlarge, from 0.5 to 0.4%. And I'm really curious to see what it'll say in June. The unemployment rate at 4.5%, PC inflation at 3.3%, and core PC inflation at 3.6%. And the federal funds rate for 2023 is projected to be between 4.9 and 5.9%. And the Fed funds rate right now is between 4.75 and 5%. And we could see an increase of another 100 basis points, maybe probably more like 75 basis points increase in interest rates until the end of the year. And I think that would be the worst case scenario for the stock market, right? And because if you scroll down, let me show you this figure too. You can download this for free. Just go to the FOMC website. If you look at on the left side here, make sure, yep, got it. You're going to see that most members in the FOMC are pretty hawkish, between 5 and 6%, with only one member staying under 5% interest rate. But there could also be a revision in the SEP depending on the CPI data and unemployment data in March, April, and May. Not to mention the earnings season has already started this week, right? So I'm curious to see how the large cap US companies performed in Q1 2023 and what their earnings projections are going to be for the rest of the year. So, all right, that should have been released now. So let's go ahead and take a look. All right. Come on, baby. Not released yet. They're a little late on releasing, apparently. You know, sometimes there's like a lag with the FOMC. I'm not sure why, but hopefully they are releasing it soon. It's already time now. Come on, baby. Show me the money. Yeah, so let me go ahead and go to the CPI release. Okay, so CPI release, it is, whoa, it is below expectation. It is 5% before seasonal adjustment. That is very interesting. Okay, so CPI rose 0.1% in March on a seasonally adjusted basis after increasing 0.4% in February. That is, wow, did not meet. So the expectation, let me really quick look at it real quick. Yeah, the expectation was 5.2%, core CPI 5.6%, is 5%. So the index for shelter was by far the largest contributor to the monthly all items increase. This more than offset a decline in the energy index, which decreased 3.5% over the month. Okay, I'm going to take a look at that. The index for all items less food and energy rose 0.4% in March after rising 0.5%. Okay, so let's take a look here. Shelter, it went slightly lower than the previous 3 months, so 0.6%. It is still up 8.2%, but the month over month increase has decreased. And let's take a look here. The utility gas pipeline, it's down another negative 7.1%, and fuel oil down another negative 4%, gasoline negative 4.6%. So the energy commodities month over month has gone down negative 4.6%. So that's really good news that we're seeing that the 5% versus 5.2%. So this is really exciting for the stock market. It should be. And I'm going to take a look at the stock market here. Do you want to take a look? It is trending up slightly in the pre-market. Yep, we are seeing a little bit of a trend up here. So let me take a look here. Medical care services, that's another one that I was paying attention to. It is down negative 0.5% month over month. All right. And yeah, okay. So transportation services are still going up, and that is a pretty large increase at 1.4%. I know the CPI data is showing that. All right. So this is a I don't want to hide a name here, but shelter is third from the bottom. And seeing that 0.6% is somewhat of a relief because we've been seeing 0.8 and 0.7 for a while. So we could see a little bit of the slowdown in demand. Food at home, that is the first time we're seeing a negative at 0.3%. So the energy's down. Let's take a look at the new vehicles. So the new vehicles are still going up by 0.4%, and the used cars and trucks are down negative 0.9%. The apparel's still going up. People are still buying clothes, apparently. Okay, so the food index was unchanged in March. Okay, the food away from home index. All right, you know what? I want to take a look at this while you guys are watching the... let me see what Bloomberg has to say. Should probably unmute that, huh?
Where Michael Darda mentioned this yesterday, do you get a disinflation with okay GDP, or does GDP really come in? And that's the raging debate given disinflation.
If you're on the FOMC after this one, Lisa, and you looked at this print and you were already sitting there pleading for patience Did you get a little bit more information, some data on your side that would take away some of that urgency to do more?
No, I didn't. And that's what I find surprising. And I'm looking at this market and not understanding what they're looking at. And I want Michael McKee to weigh in on this. Did you see any progress whatsoever other than the fact that you basically had transitory types of food and energy prices make a move in the positive direction?
It's the core that went down. The food and energy prices went down significantly, especially natural gas. Gasoline prices were surprisingly down as much as they are, because we all know they've gone back up in recent weeks. Used cars and trucks down 11.2%. So whatever is happening between the wholesale numbers and the retail numbers, we are not seeing any kind of action. New cars, however, were up 6.1%. There's still a shortage there, which some say the automakers are encouraging because it keeps the prices higher.
So John just asked me, if I were on the FOMC and I got this data, would I feel comforted? If I otherwise was moved toward this sort of pause or more cautious approach, would this give me some sense of confidence in that approach? Do you think that it would?
I think it would reinforce the idea that you're on the right track, and that what you need to do is leave rates high enough so that the cumulated effect of all your rate increases starts to have a greater impact. But what they're really going to want to see, and they won't have by May, is evidence of what's happening in the housing market. We've been anticipating, but because of the lags in rents falling and getting into CPI, most economists have said we won't see it until like the May numbers, which we'll get in June. At that point, we might see a big drop. And that's another reason why the Fed may want to express caution coming out of the next meeting. I'm not sure they'll say we're done, but they will dial back the idea that a rate increase is automatic at the next.
Yeah, so there are people. So Wall Street is talking about, possible rate pause in May. So they're meeting on May 2nd and 3rd. That's the next FOMC meeting. So, yeah, right now the market is trending up in the pre-market. But yeah, Bloomberg has a point, and I've been talking about this for a while. When we look at the inflation data, right? So today it's April 12th, right? But we're looking at the March data. So when the April data comes out, that's not until mid-May, after the FOMC meeting in May. So the Fed has a tough job to kind of determine, if they're going to raise interest rates or if they're going to pause interest rates based on what happened in the month of March, right? So if you're just tuning in, they didn't, inflation came in 5% versus 5.2%. So there's a significant slowdown, as I said earlier, in food and energy. So, none of us like the word transitory, because, you remember we all said that I didn't say that, but when inflation was transitory. But it'll be interesting to see if the Fed is going to pause interest rates in May. And then they're going to wait until they see the CPI release in June to take a look at May. And they're going to wait for the April CPI for mid-May. And you know what? Real quick, I'm going to pull up the CPI release calculator here. Not calculator, the calendar. Okay, so let's take a look. So the next one that's coming out is May 10th. So yeah, it'll be a couple days, a week after the FOMC meeting. And the May 10th is going to be for the April, right? And the June 13th, and this is a really interesting one. June 13th, right here for the May May CPI. The FOMC meeting is on June 13th. So that's the same day that the CPI comes out. They're having a meeting. And then June 14th, Jerome Powell is going to have that press conference to let everybody know what they're going to do, what they came up with. And we're also going to get the summary of economic projections in June to find out what their GDP projections are going to be for the rest of 2023 and 2024, 2025, and as well as PC core inflation and what the target Fed funds rate is going to be, all that stuff. So June right here is going to be a big one again, because CPI is coming out on June 13th, and they're having an FOMC meeting on the same day on June 13th. So that's going to be pretty interesting to see. But inflation coming out 5% was not what I expected, especially with the food. The index for food is coming down significantly. But again, remember this. What we're looking at right now, this is all the month of March, right? So there's a lag in the data, right? That's for anything, even for unemployment as well. So there's going to be a lag in the data. So we're not going to find out what's going on with April, so this month, until next month after the FOMC meeting. So there's a possibility that the FOMC meeting, they could have a meeting and say, hey, we're seeing a pretty good cool down of inflation. Maybe we should pause a rate hike, and then we're going to see what happens for the data for the months of April and May, and then we'll just reconvene until June. That's a huge possibility. And I'm going to read more into this, but shelter has slightly calmed down, but it is still increasing year over year. And we are seeing a pretty significant increase in transportation services. So I'm guessing the same thing with the the car insurance. Those are going up as well. Apparel is slightly going up, and the medical care commodities are going up. The new vehicles are higher at 0.4%, and used cars and trucks are down 0.9%. But anyway, yeah, this is a very interesting inflation data, and I am gonna keep reading it, but I do have to go. I really appreciate you guys tuning in. If you want to subscribe, just go ahead and subscribe. If you have any questions, just go ahead and leave me a comment down below. But until next time.